All right, what's up, everybody? I am doing another Moneyball mortgage interview, this time with David Lykken, good friend, longtime podcaster, industry leader. People in the C, everyone in the C-suite knows who David Lykken is. For you loan officers that don't know who David is, David, what's probably the best place for a loan officer to go to find out who you are?
LinkedIn is one of the, I think that's the best place to go. LinkedIn, you can learn more about what I talk about by going to my podcast, LykkenOnLending.com, Lykken, LykkenOnLending.com. And that's good luck in Norwegian, by the way, good fortune or good luck. So.
Yeah, well, this man is literally one of the most well-respected, well-known executives in the mortgage space. He's seen it all. He's coached many of the top, mentored and coached many of the top CEOs and heads of production. He's, right on the ground floor in terms of all the M&A activity that's taking place in the mortgage industry right now. And I wanted to, David, get your take on Moneyball Mortgage. I know you watched the interview I did with Jim.
That was such a good interview. My gosh. I mean, I was taking notes, and the slides and the data. Jim is, first of all, he's just one of those detailed guys that I have so much respect for. I honestly don't know him very well. I've met him on a few occasions, but the guy is just so smart, and the way he looks at the industry as we need to be. It was many, many years ago when I opened up my first mortgage company, probably 40 years ago. And someone walked up to me at the time and who says, Dave, manage the number, manage by the numbers. It'll go well, manage by the numbers. And of course, I'm a relationship guy, so that didn't come naturally for me. And anytime I didn't manage by the numbers, I paid for it. So that's one of the things I have tremendous respect for what Jim doing. And I applaud you, David, for bringing this to our attention as an industry. We desperately need to start playing the game differently. And switch that book, Moneyball.
Yeah, and so I'm not gonna, if anybody who hasn't watched the movie Moneyball, it is a Brad Pitt movie. It is, to me, one of the 5 most important books that anyone in business, or not books, but the book and the movie should consume. Entrepreneurs, my son is an entrepreneur major in college, and one of the first things I'm like, oh, you got to watch Moneyball. It's a really important piece of work. And I wrote several months ago, it's time for Moneyball Mortgage in the mortgage industry, because I think not only does the C-suite need to think differently, and I want to get your opinion on that, but every loan officer in America needs to change your metrics. How many loans you closed, what your production is. Those are lagging indicators. And so we'll talk about what are the Moneyball algorithms. But Dave, let's just start with what is money, after listening to that interview, what does Moneyball Mortgage mean to you?
Well, it means, be honest with you, it's the difference between success and failure right now. I don't think anyone realizes where we're at as an industry. Where we're at is not sustainable, David. When you have $13,000, the cost between origination and operations, someone said it's fallen just below 13,000, but it's still close, way too high to cost to originate a loan and pay out commissions on. That is not sustainable. And here's why I say that. You said, well, we've been doing it for years and nothing's going to change it. Well, that's not true. There is change happening in our midst right now that's being introduced that slashes the cost to originate a loan down below $1,000, actually below a couple $100. And that's technology. You go, how is that? Artificial AI? I mean, that's a fantasy. Well, it may be a fantasy for some, but it is a reality and it's happening. I tell everyone to go pay attention to AngelAI.com. This is a company that is end-to-end automating what's being done. And what it doesn't do away with mortgage loan originators. It gets mortgage loan originators equipped to do what they're best at. And that is have good relationship skills, build their relationships, and let's the thing that none of us are loan originators. I was a loan originator for many, many years. And they're the details parts of the business. I mean, I had to do it because I wanted to be successful. But this takes that out. So there's so many technology initiatives. The one that I'm paying the most attention to is that one particular one at the time, David, right now. So I just tell you, it is, and I introduced you to Pavan when we were together in Nashville. It is, you got to pay attention to this stuff. It's really interesting what's happening.
Yeah, no, it really is. Well, I want to I want to go through a couple of Jim's slides.
Yes.
I want to ask some specific questions. So, this is one of his slides. I'm actually pulling from the slides this Thursday. I'm doing another more of a webinar called Moneyball Mortgage: A Path to Profitability. And I'm actually interviewing Rich Harris, our CEO, with Jim, and we're going to go through this. But I want to pull up this particular slide because one of the things I did not realize just how, and by the way, I've shown this slide to a number of loan officers, and most loan officers don't realize just how much it costs a company when a loan is withdrawn. When it goes through loan manufacturing process, rates are locked, and there's fallout. It really was pretty jaw-dropping, like 40 basis points in expense. Any comments or thoughts on that?
Well, there's a lot of awareness that needs to be happening within the MLO ranks right now. And that is, if you're truly a professional industry, you're going to pay attention to these numbers. You go, that's not my concern. I mean, I'm here to originate loans, and yeah, there's going to be some fallout, but some of the fallout can be managed if you're a true professional. So it's upping your game as an MLO and looking at this. And this should be a number everyone should take seriously, not just the business owners. I'm telling everyone right now that I'm talking to on my podcast, think like an entrepreneur or an entrepreneur. You need to be an entrepreneur within your organization. You need to be thinking about cost. You need to look at your own cost, the cost originating, how you're spending it. We've got to go from a one-to-one to one-to-many. And that is going to require some new disciplines and new skills, David. So I applaud you for putting that slide out there. Originators, pay attention to it. If you really consider yourself a serious professional in this industry, you're going to know that number, and you're going to know your number and the cost it takes. And if you don't know the number, meet with your managers, your executives at the company, call up finance, talk to the CFO, and he'll let them walk through it. I think that's going to be such an important number. One of the many numbers we need to manage, David.
Yeah, well, that was one of my big takeaways. It's time for extreme ownership or extreme transparency. I was on a show, Ryan Hills, who you and I have done a show together with, the RE Source. He had Jim and I on recently. By the way, Google that. I'll put a link down below to Ryan Hill's Money Source. I think he called it Moneyball 2.0. This is another slide I want to get your thoughts on, and I really have two questions on this one. This one really called out, hey, there's three. If you took all your loan officers and you put them into three tiers, tier one, they're making money, and in Jim's anonymized case, it was about $2,400 in profit. Tier two, he said they're usually making 100 to losing a couple hundred. And then bottom tier are like losing, $5,000 loans. So my two questions here, David. First of all, do you think that this is pretty common? Or like this particular scenario of, my tier one loan officers are making 2,000, my bottom tier losing 5. Do you think this is kind of a one-off, or do you think this is pretty
this is spot on? Again, I'm looking for where he got the data out of this. Again, I applaud the slides. The data is one thing that it's just a good looking slide, the way it's presented, the data is presented. But I got to tell you, that is spot on to what we're seeing. It's the old Pareto's law, 80-20. And I'm not sure if that's what the ratios are here, just seeing these numbers up here, trying to do the math in my head. But what's the important part is, what are you as production managers, as executives, doing with this kind of information? I think it's so important to, back in my earliest days, I put all originators in 3 categories: RIP, PIP, and POP. RIP is rest in peace. You're doing so well, just keep doing it. I love that. And then the other one at the other end was POP, produce or perish. That's that other group at the other end. There's some people, either they need to get it figured out, or they just need to perish and go on and find another career. They're pulling down the bottom line in the company. They're pulling down most likely with their attitudes, they're pulling down, telling everyone they can't, there's nothing to do. They're pulling down others that could have. The middle category is where we need to really focus our attention. That's why I think what you're doing at Trust Engine is so important. And that is produce in a personal improvement plan. So RIP is rest in peace. PIP is a personal improvement plan. What in personal improvement plan should you be on? That should managers be putting you on? So the ones in the POP category, I hate to say it, they need to be washed out and they need to go find a new career. And I say that with all due respect, because there's sometimes where there's some people that just aren't designed for this. And it's getting to that point where even the ones in the RIP category that are doing really well, I believe they need to examine their game, because we're coming into a new season, David, where social media and the one-to-many, I look at you, David, as such, and I'm doing it through my podcast, but I love how you're doing with the video and everything, is getting one-to-many. You look at what you have done with Trust Engine, your brand, Mortgage Coach over the years. Would you have gotten there had you not been doing this one-to-many program, David?
I don't know. I mean, obviously the YouTube
Work.
channel, the one-to-many is a big part of our success story, without question.
No question. And I think it's how you're doing it. So not only that, it's one thing is to do it. Another thing is to do it well. And you do. You're always bringing compelling content. That's the name of the game. What are you doing? Are you doing it for your own, becoming famous or well-known in the industry? No, you're doing it to help people. And when we do it for the unselfish motive of trying to help our industry grow, and that's what you're about, that's what I'm about, that's what Jim is about. And we all have different skill sets. I'm an encourager. Jim goes into numbers and does a really good deep dive that we need to look at the numbers. We need all of us at this game, David. And it's most important to find out what is your skill set, what is your mindset, what are the gifts that you bring, and play to your strengths.
So, by the way, I loved your 3 categories. I want to make sure I get them right. What's the good one? Like, just
the
keep
good
doing
one is RIP. RIP is rest in peace. You're
okay,
doing
rest in peace.
Yeah.
And then what's the second one?
PIP is personal improvement plan.
And then POP is
producer perish. This is the guy that's, the guy or gal that's just, you're either going to have to figure it out, get up, and most of the time, most of them are going to perish in this kind of market. And there are some in the PIP category, the personal improvement plan, that are going to struggle to make it, because do they have the skills to do that? But that's where I think, again, you didn't ask me to promote you, but that's what Trust Engine does. You give so many skills to originators to do better. What Ryan does with RETV. I mean, you guys are out there giving information, and it's becoming more about, are you an educator? Are you a consultant? I'm a consultant and a coach. Every loan originator needs to be a coach and a consultant and encourager to a very depressed real estate industry. You look what they're going through right now with NAR and the commission debacle. I mean, that's going, call it a debacle, or it's a tectonic shift. It's a seismic tectonic shift when you think that half of the commission is going to be restructured in some way, shape, or form. And that is happening. And so the number of loan originators that are not aware of it, much less the number of realtors, is probably really shocking. And that's those that sit in the POP category. They just need to exit the industry.
so let's drill down on, let's try to make this actionable, and we can cover a lot of different things. But when I asked Jim, what is the biggest difference between the bottom tier and the top tier, and he said price exceptions. The amount of concessions is the biggest difference. I'm going to show a little data point, because I'll be sharing this in more detail on our webinar later on this week. But the average, according to Optimal Blue, I talked to Chaz Houston at the event you and I were recently at. He's in charge of strategic alliances with Optimal Blue. They do over 40% of the mortgages in America, and the average cost of a concession right now is 80 basis points. And that is a lot of money. And remember, guys, I would make the claim that over 50%, potentially 70% of price exceptions are completely unnecessary.
Absolutely necessary.
If loan officers would just follow the best practices, create some process improvements that literally over 50%. And by the way, I know this for a fact, because one of the things we do at Trust Engine is we have our clients, they provide us loan officers that are delivering a total cost. They're delivering a digital, valuable, trusted advisor experience. We call it always be coaching. Their coaches have sometimes it's up to 65 basis points are more profitable than those who aren't. So right. What are your thoughts on that? What percentage of loans do you think are getting price exceptions right now? And do you support the 80 basis points, or do you think it's a little higher?
That's absolutely right. In fact, anything that number is getting worse. Because of the nature of what's going on behind me in the screens right here. We got the MBS live.net screens up here. And It's reporting what's happened to the 10-year treasury today alone. When we're recording this, it's again spiked up. We've broken out through some new ranges. Hopefully it'll settle down. I personally think we may have seen a ceiling here. I hope, maybe that's wishful thinking, but we need to be prepared for this thing going higher. But what's also really interesting about the data in those slides that I heard you talking about when I listened to that introduction or that interview that you did with Jim, which was brilliant, is the number of price exceptions in the RIP category, the top, the guys that are the best. It is a much smaller percentage. They're not the ones that are getting the business because they're asking for pricing exceptions. And I think if you could find that slide, it'd be meaningful to show that, because, well, they're successful because they got more price exceptions. That's not the case. That's just factually not true. It's not. It's the ones that are in the middle or bottom categories that are ones that are asking for the exceptions because their sales skills are not enough to overcome it. You know, there are places where a price exception, I get it. There is a place where a price exceptions needs to happen. But man, you need to be looking at why you're doing it. And sales managers, you need to be looking at your skill set of the individuals that are asking for this. Bring this data to them. And then also what we're doing with a number of our clients, one of my clients is Alcova Mortgage out in Virginia. We got Atlantic Bay. And what they're doing is they're taking their best people and training the others that are not doing this. So rather than landing always on the sales manager job, why don't you take the best of your best and help educate the ones that are struggling? So I think you'll get some real good feedback. It's one of the things that happened in my life early on, 50 years ago when I started this business, that was when I got to be mentored by some of the best. It was such an important part.
Yeah, no doubt. Well, tell me what your thoughts are on this. And feel free to say what's missing, but I'm trying to come up with a new algorithm. And right now, the algorithm for most lenders is how many loans did you close? What's your volume? And those are at the top. And I'm saying, hey, let's flip this script and let's make conversion in the funnel, credit report to close loan. Like, let's make that transparent. Every loan officer watching this, you should know credit report to close loan. Like, what is your conversion? Price concessions, number 2. There is an argument to make that number 1. I made it number 2 just because I think it can be a little more inconsistent. Like, if you're a loan officer that is making 80 to 100 basis points versus a loan officer that's got their comp at 120 to 150, like, you know, there's nuance to that. And then number 3, conversion above the funnel. Like, RUM stands for records under management versus closed loan. Like, start managing the conversion of your database. And then, hey, let's keep number 4 and 5 on the list, but let's just not rank them at the top. Let's put, if we literally obsessed as an industry around this number, and we literally obsessed at the best practices conversion, I literally think that every lender would be profitable today, and they would grow faster and be even more profitable going forward. Thoughts on that?
Well, but the thought, first of all, I agree with you on what you're saying. The one thing that's missing, glaringly missing to me in that, as a business owner, a former owner of 3 mortgage banking companies, is we published and made aware of how someone is more profitable than another. It goes to products. You look at certain bond programs, which historically have been really thin margined, a lot of exceptions around it, a lot of activity. I think what we need to publish is the net profit on a loan. So I love the conversion, what you're doing. That's logical. I think the sales funnel, the top of the sales funnel, we just need a whole lot more activity going on around there to fill that thing up. It's very scarce for many of them out there. But the profitability is the thing that I think, and every single loan I closed in all my years of doing this, and when I owned mortgage companies, I had a P&L on every single loan, and I made that P&L, how much money I made on that loan. I wasn't afraid of it. I published it. Many business owners are afraid to show how much money they're making, especially in the good times. That's a wrong culture. You should be proud of it. You should help them, make them celebrate. If you have loan officers, then they say they'll get greedy and they just want more of it. They'll say, I can pay more in commissions. Then I'll argue that I'm not sure you got the right loan officers, that thing like that. I like the loan officer who says, boss, I want you making a boatload of money on this. I hope you'll be saving it so that we can exist when the storms come. We certainly are going through one right now, David.
So
And
let
those
me see if I got this. Let me see if I got this
Yeah.
right for you. Let me see
Yeah.
if I got it right.
Yeah.
So I'm not going to make it number one because I really want to focus on conversion.
Yep.
But I really do believe pricing concessions is a sales skill that we can manage and train to.
Yep. I'm fine with that.
And then product profits per loan, number 3. Would this be a good Dave
That would be
Lykken
good.
Moneyball algorithm?
That would be my addition and contribution to this.
Well, dude, I'm gonna walk through this at some point on my Thursday webinar, and thank you, David Lykken.
Yeah.
Now let's. Well, first of all, anything you want to share, feel free. I want to show a couple best practices, and I just want to make a point that I have permission from NFM to share this. And the 94 loan officers who use Trust Engine Mortgage Coach were 65 basis points more profitable than the 319 that don't use Mortgage Coach. And I want to make it clear why that is the case. Like, first of all, if you're a loan officer and you're giving, like, here's your rate, here's your payment, here's your cash to close in a PDF or in an email, that's a transactional experience. That is very shoppable, and when you do get grinded, your best weapon is a price exception by basis points. So what we teach, David, and I'd love to get your thoughts, is show options. Show, hey, with 2 points, 1 point, 0 points. And then because rates are so high right now, and we know they're going to be down sooner or later, show what it's going to look like when people refi. So if you show a consumer options and you show them what the future refi is going to look like, one, they're less likely to shop you. And then when they do, because by the way, a lot of people are still going to shop, you show your loan compared to your competition. And like, this is a 0.5% lower rate, but you show the cost over 12 months. And in this case, it's $2,000. And if you do negotiate a price exception, you do it dollars, like $500, $1,000. You don't do it with interest rates and basis points. I think that's why price exceptions are 80 basis points, is because they're negotiating with rates,
not focusing on the right
points instead of dollars.
That's right. It's what you focus on and the span in which the time frame. I think the thing what you're really bringing out there in my mind, David, is, are you convincing the borrower, the consumer that you're talking to and who's shopping around, that you're the best partner over the life of their loan, as long as they own that home, to be the best financial advisor, mortgage advisor? And when you show it like you do with those kind of numbers, there's a much greater probability that they're going to get the value prop that I need to work with this person because they are going to be there with me. And they'll say, I'll have you in my database. I'm going to contact you as soon as the rates fall to this level. We'll be one of the first ones back into refinancing that loan. I'll be doing this. And that, I know that's going to cause a few secondary guys cringe a little bit, because we have the premium recapture. It happens too soon. But the reality is that's how we're going to get the business. We need to be convincing the consumer that we are their partner, their best partner, whereas the competition who's just selling rate, we're not going to convince them. You have a better chance of winning it with that argument. Great job, David.
All right. So let's, we've got just a few minutes left, but I want to make sure, is there anything else? It could be Moneyball Mortgage. It could be anything that you want to make sure that every loan officer, every C-suite executive that's watching this video, I do want it to be things like, if you implemented this today, you would win today, and you would do it in a way that helps you tomorrow. Any other strategies, ideas, things you want people to think about?
I think first of all, the most important thing is, are you messaging hope out there, and how are you doing it? What you just talked about there helps bring that about. It's, are you training and investing in your people? I'm going to make something that I've been studying this, and I'm now going on a speaking tour next week. I'll be speaking at 3 conferences next week. One of which is going to be at Housing Wire. I think you and I will be together there for a little bit.
We will, yeah.
But I'm speaking on it, and I'm going to say this, and this is going to shock. Everyone said that when we hit $4 trillion in originations, that was the high water mark. I now have mathematical, empirical data and logic to support that we're going to see within the next 3 to 5 years a $6 trillion year. So what that means to me, David, 6 trillion. We're going to
wait a minute. You got to show that. Are you going to share that from stage?
I will share that. I'm putting together a slide deck right now. We'll get back on and I'll walk people through it. It's it is, in fact, those are conservative numbers for what we could hit, David, with where the market's going. I believe that now there's some certain events that have to happen, but I want to say, so here's the deal. What are you going to prepare for? Another mark? That's the high water mark and we're going to be at the low water. I think that's the wrong attitude. I think the best thing is what do we know about our cycles? When we hit the last time was 3 trillion and we hit 4 trillion, everyone says, no, that was the high water mark. We'll never see 3 trillion ever again. Well, we hit 4 trillion. Well, that was because of the pandemic. And that's because they falsely pushed down things. There'll be another set of circumstances. I'm telling you that I'm 73 years old. I may be dead by the time that comes then. No, I'll be alive and doing well in 3 to 5 years. Promise you, I'll still be consulting in this business. But here's the deal. There's real numbers that we're going to get to, those kind of numbers. So what you need to be doing is preparing your company to go through this dark, very cold Q4 winter and possibly into Q1. And then how are we going to emerge on the other side of that? And it's by getting what you're talking about here. Every company managing and running on a Moneyball basis, running their business like that by the numbers, that's going to be the ones that are surviving, come on the other side of this. The ones that are not, they're going to look like the dinosaurs and the woolly mammoths, because they're going to be, they're extinct. They'll be extinct.
Yeah, no, it is I think it's a very exciting time. I'm going to be doing a panel called Moneyball Mortgage with Brian Hale, industry legend, and James Heck, the head of all sales channels for New Res. And we're going to be talking about this, but I can't wait to see your thesis and your synopsis around 6 trillion. That's hard for me to personally fathom. It's hard to, but I do know, like, there's at least 3 trillion in refinanceable mortgages in the market right now. When you just look at how many loans that have been done, over 6%, there is, when the market shifts and it starts to come down, and we know this. I mean, Trust Engine, we have all that data, and we are going to efficiently and effectively help lenders and loan officers optimize those loans. So I can't wait to see your 6 trillion. Are you going to share that?
I will. I'm going to be putting together a video, and that I'll be sharing out to the industry. But I would love to, before I release it, Dave, I'll come on your podcast and we'll release it out to your audience so that you can see the numbers. Here's the reason. I think what we need to be doing, not false hope. We need to be creating hope out there, and we need to focus. We're going through a very, very difficult time. One of the worst I've seen in the 50 years I've been in this industry. We need to create hope. There is the other side of this storm, and it's going to be amazing, David.
Well, I am excited about the future. I don't know if it's going to, put it this way, everybody. What if it was just a $3 trillion year and the next 2 years? If you improve your sales skills, improve your conversion, know your numbers. My push to every loan officer, to every executive, let's make conversion the North Star. Let's celebrate conversion. Even if, we're announcing, hey, this is the #1 loan officer and his conversion is number 3. Let's celebrate who has the highest conversion rate in the company. Let's celebrate who has the lowest concessions. And let's make sure that when we're celebrating production, we're also celebrating efficiency and effectiveness at the same time. That's my push. That's one of the things that Kristen and I put in our halftime report. That's something that I'm really trying to push hard between now and the end of the year, to get as many loan officers, as many lenders focused on Moneyball Mortgage. Dave, any closing thoughts, brother?
Yeah, what you're talking about is, what are we celebrating is what is going to make the difference. What do we celebrate? And let's start celebrating the right things, and we'll see you on the other side.
All right. We'll remind everybody how to get your podcast. Follow David on LinkedIn. How do they go to get your podcast?
Podcasts, go to www.lykken, Lykken, onlending.com. Look forward to having you. We're doing a lot of podcasts right now around the real estate commission, because we're trying to get that word out. And then also focusing more on some of the AI technology that's coming out. It's going to be significant.
Okay. One more thing before you go. I mean, I have read enough and had enough conversations with some of the most respected elite coaches, advisors in real estate. And I am personally convinced that, hey, it is happening. Like, it's no longer if there's going to be a seismic shift in real estate commissions, and that the buyer agent is going to be disconnected from the listing, and the seller's So, okay, that's it'd be weird. It would be a shock if it didn't happen at this point. How fast do you think this is going to happen? What's
This
a
is the
speed?
part that's probably going to shock those that are coming out of shock and now accepting it. It's going to happen so quickly. It is already happening, David. If you look at the MLS up at the Pacific Northwest, MLS up there has already changed it. You look at Remax, how they just settled and how they're changing. They said, we are not guilty, but we're going to settle out of this lawsuit, mitigate the damages. Let's get out. More and more are settling out. Now, what is not yet certain, and this is where the opportunity for those that think strategy like I do is, what are the opportunities? Where should we be going? We're going to be releasing some podcasts I encourage your listeners to listen to. One is going to be Marjorie Adams, and I'm going to be really excited about that because I think she came forth with one of the most well thought out where this could go. And it's probably the more conservative approach. I think what it really comes down to for realtors is how good are you at selling your services? And they say still on $1 million sale, it's still $30,000. Are you going to convince someone to pay $30,000 out of that? I believe you'll be surprised at what will emerge out of this. But the answer is there's going to be some great, tremendous opportunities for those that see it and are thinking the right way about it, just like thinking the right way about Moneyball.
Yeah, well, and my closing thought on that is that already the loan officer that is the mortgage coach, like if you were a realtor and you were in a market like this, would you rather work with a loan officer that's quoting rates and closing loans, or would you rather work with a mortgage professional that's showing and creating charts and creating services on how to build wealth with real estate? Like there's never going to be a better opportunity for the mortgage professional that is a coach, that is a professional, that is a data-driven mortgage advisor. Like there's so much opportunity for people that take it to the next level.
It is. And it's all about being a good coach. And that's what's going to make the difference. And you get the right technology behind you. You're not going to have to mess with all that other stuff that's been distraction. Focus on developing your coaching and consulting skills. It'll make all the difference.
When is that interview going to come out? Is that like days, weeks?
It's coming out. I'm releasing it out next week when I'm speaking. She and I are both speaking at Elkova's conference. And so we'll be releasing it next week. So it'll be probably one of the best interviews I've done. We got several more coming on. I'm just talking to several now that people are listening to this. I'm getting the presence of major real estate firms wanting to come on and talk about what they think, and they're trying to get ahead of it and trying to control the narrative on it. It remains to be seen. Think creatively out there, guys. And yeah, so this is a really exciting opportunity. What it could mean for those who are thinking creatively and around the corner a bit. Could be tremendous wealth creation.
All right. Well, I will make sure I share that on social media. David Lykken, super grateful for your time. Everyone watching this, make sure you follow David. Make sure you subscribe to our YouTube channel. Make sure you are in our Trust Engine Facebook group. And this is a wrap. Take care, everybody.
Thank you, David.